Good morning, ladies and gentlemen. Thank you for joining us today for our digital insurance webinar. Special thanks to the speakers for taking the time to join us today. And we have two speakers today dialing in at 11 p.m. and one at 5 a.m. So, really thankful that they went through the trouble to dial in at ungodly hours to share their views with us. And also, special thanks to OneSpan for sponsoring this webinar as well. While Asia has caught the digital banking bug in the past 2 to 3 years, one thing that's not often spoken about enough is the digitization of the insurance sector. From regulators introducing digital only insurance licenses to insurers overhauling their digital core and insurtechs reinventing their business models, reinventing overall business models. There's a flurry of activities within this space that's worth examining. Joining us today to deep dive into the latest trends, developments, and more. We have on top that Tomasz, who is the chairman of the Audit and InsurTech Committee of Singapore FinTech Association, and he's also currently the Chief Transformation and Digital Officer at AXA as well. Below Tomasz, we have Samir. Samir is the Vice President of Growth and Transformation for OneSpan. Below Samir, we have Sean. Sean is the General Manager of IXT by One Degree. IXT is the technology arm of One Degree, which is one of the four digital insurers in Hong Kong. And of course, below there, we have Melissa Wong, who is the Group Chief Product Officer for bolttech, a insurtech unicorn. Folks, thanks for joining us. Happy to have all of you here. So maybe we can begin by talking about broad trends, and we can start with Tomasz. Tomasz, why don't you paint us a picture of what are some of the biggest trends that you're seeing happening in this space now? Tomasz, you have the floor.
Thank you. Thank you for the introduction and invitation. And just before I start, a bit of safe harbor, just to mention that today I'm speaking on behalf and sharing my personal opinions. So those are not the opinions of my employer. Just before we move to the core of the discussion. So if we look at the general trends, we have a few different perspectives that are unfolding. And to be honest, those are in two key verticals. One is more looking outside the insurance sector as well itself, and the second one is more looking into the inside of the insurance. So let's start with the first one, and many of the co-panelists will be familiar with it, which is the fact of the development of the embedded insurance. It is a very topical strategy and go-to-market strategy for many players, both incumbents as well as the new insurers, especially digital insurers, but as well technology player that's trying to find the right avenue to capture this large pool of the risk, large pool of the market. And the second one is I know that for the past 2 years, we have been speaking a lot about COVID, but as a consequence of COVID, a lot of good actually things happened for the insurance industry. But in the same time, it pushed the insurers to look inside and start looking at cost. Because with COVID, what has changed is the cost of acquisition went up, because suddenly much more insurers, and not only insurers, went towards the acquisition of the customers online, but as well as commoditization of the products advanced. So there's less, there are more and more product available on the market that look exactly the same for the customers. So one of the key, this creates a conundrum and challenge for the traditional insurance is how we can start focusing on a value created, and this is where the increase the lifetime value of the customer, as well as make sure that the business is profitable that we are running. So those are two key trends that I see that are, I would say, agnostic from the maturity of the player and maturity of the market.
Thanks for that, Thomas. And we're also seeing similar trends in Malaysia as well with embedded insurance, which is why some of the biggest rounds in fintech is actually from insurance companies, right? We have Great Eastern investing into the Malaysian e-wallet Boost at 70 million US dollars. We have AIA leading a, if I'm not mistaken, 150 million round into the Touch and Go e-wallet. So certainly a lot of insurers are looking into using embedded insurance to kind of distribute their products and whatnot. So those are some excellent points brought up. Thanks for that, Tomasz. Let's move on to Samir. Samir, tell us what are some of the biggest trends that you're seeing in this space right now?
Well, thanks. I represent OneSpan. OneSpan is a technology provider for digital agreements, and we provide them in a secure way. So, well, my views here are coming more from what we see insurers, both traditional as well as digital insurers, kind of implement solutions. So it's more from a vendor-centric view as such. But one thing which I'm seeing globally is that what we live in today is an anywhere economy, and people are wanting to transact, buy products from the comforts of their house, and the traditional models of engaging someone have changed in a big way. You are yet engaging the seller, but you're changing it through omni-channel experience today. In a lot which is driven was driven by COVID here, but also I think these trends were happening. Digitization is such a secular trend across the globe that it's been happening. COVID accelerated it for sure. So the need for it kind of got heightened there. But this has been happening, especially with the new generation, the millennials and the Gen Zs. I mean, they are a digital first kind of buyers. These are not people who are looking to engage in traditional models as their parents bought these products. So a lot of these things are kind of coming together. I saw this one survey with ENY recently, which was talking about how people have been, there's 30% more buyers in the life insurance product globally during the pandemic. I mean, these are trends which are really driving a need for, as Thomas was saying, creating value of differentiated products and not getting lost in that me too, and everyone just being like kind of getting commoditized as such. So we see a lot of activity from even traditional brick and mortar businesses as well as digital insurers to kind of capture these trends and be able to accelerate their businesses.
So you brought, excuse me, you brought up a few important themes over there, right? And you kind of talk about how there's a preference to purchase insurance over digital channels. Well, I think that may be true for a lot of people. Like personally, I don't really like to deal with agents because sometimes I feel they represent one or two brands, and then they'll try to push what they want to sell instead of what necessarily is the best product for myself, right? But we are still seeing the agent distribution model being the main channel for a lot of insurers to actually get new customers, particularly in the life insurance segment, right? So maybe we can kind of dive into that a little bit more later, talking about how we can make that shift or if that shift even is going to happen. So let's have a more deep dive kind of discussion about that later. But meanwhile, let's move to Sean. Sean, tell us, what are some of the biggest trends that you're seeing in this space right now?
Sure. So I agree with most of the points that I think Thomas and Samir raised earlier. So I think the buzzword for the sector is really around embedded insurance. And interestingly, I think embedded insurance is um, a trend that new ecosystem platforms are actually dragging incumbent insurance by the nose to innovate and really to also relook at their technology capabilities in terms of being able to cater to such solutions, right? I think since the pandemic, insurers were all scrambling to transform their internal technology capabilities, and I suppose for some of them, the terminology of APIs were probably the first time they were hearing about it. So yeah, I think that the digital intervention is happening, definitely pandemic driven, pandemic led. And on the consumer front, the pandemic has also advanced insurance awareness, creating more demand. COVID coverage actually is a great lead generation tool in terms of building awareness, right? While just because of the lockdown, global lockdown, people can't meet agents as much. And to your point around not wanting to meet agents as much because of different agendas, I think what we have noticed is that consumers are starting to become a bit more open towards self-service and learning more about digital trust. But an omni-channel approach still needs to happen to really enable a hybrid operating model, right? Just because you can't really sell consumers products that are a bit more complex, right? They would still need that trust factor. So I would say that the key trends around is starting to see digital-led operating models for different insurers. Digital direct products will still take some time, but today what we see, the affinity-led opportunity is fast growing, and it's something that I would say a lot of insurers are trying to capitalize on.
Thanks for that, Sean. Yeah, a lot of interesting things that's definitely happening in this space as well. Thanks for giving us an overview. Let's move on to Melissa. Melissa, what are the biggest things right now that you're seeing in this space?
Yeah, thanks for having me as well, Vincent, and to the other panelists for sharing the panel. Look, bolttech, we are a global insurtech, so really we're looking across a number of different continents, whether it's the US, Europe, or Asia. So the trends, I would say, you could kind of say that they're different in terms of sort of levels of maturity across these regions. But really, honestly, I would say they're same, but different, right? So really three things that I see across, our experience. So first one is this concept of co-opetition. So what is co-opetition? It's really that insurance players today are working more closely together. So competitors, what would naturally be competition, are actually working more closely together in ecosystems to try to do better for their customers. I would say it's at the early stages of it, but bolttech being what I would call the orchestrator of an ecosystem through our technology, our connectivity layer, is actually seeing some really, really interesting trends, especially in the US. So I can happy to talk about that a bit later. Second piece, and I think it's been touched upon, which is really this concept that, everyone says, okay, so digitization is going to, take over. But I still, and really, practically have seen that across the board, offline is still here to stay. So it's really about how we use digital and offline to do best for our customer. It doesn't matter. I mean, some will say, okay, well, I'm here based in Asia, but and Asia maybe is kind of maybe leading the way in terms of leapfrogging in terms of online. But say with US, right? US, we still see 50 to 60% drop from online to offline. So I think the importance is this this realization that the offline world is here to stay. Insurance is a financial product. It requires trust, and thus people still want to have that human touch. And then finally, I would really kind of expand upon what I think Sean brought up around APIs, the necessity for connectivity, not just from the distribution side, but also on the supply side. So we see it being the sort of centerpiece and the connectivity between the distribution and supply. We're seeing insurers become a lot more mature in terms of the APIs that they can provide in terms of product, but then on the distribution side to move fast, to experiment, to be able to really test that that spectrum of sort of embedded insurance all the way through to kind of more traditional products. APIs have really changed the game in terms of being able to get out there and try different and new business models.
Thank you for that, Melissa. And I guess a testament to what you're saying about your belief in the convergence of digital and also offline as well is reflected by your recent acquisitions, right? The acquisitions of Ava and the acquisitions of, I think, was it Sherpa? So that kind of reflects where the thinking is at for bolttech. So thanks for sharing your views. And on that note of, whether or not the offline world is here to stay, whether digital insurance is going to take over, maybe we can jump back to Tomasz. Tomasz, do you think that we will reach a point where we no longer require the insurance agents to sell insurance? Do you think there are a certain inflection point where digital channels would be effective and the key kind of channel for consumers to buy complex insurance products? What do you think, Tomasz?
So let me, in the context of this question, let me just clarify something that's actually with the previous discussion. What we were talking about is embedded insurance, but embedded insurance actually has origins in the offline world, and all the covers that we have been buying when renting cars and so on, it's all embedded insurance, embedded products. So actually, the fact that something exists doesn't mean it's was born with the digital. It's just digital is facilitating the transactions and making more easier for the customer and seamless. So, and this is, I think, a good segue to your question. And to be honest, I could turn the table around and ask you the question: is there right now any industry where customers don't use online to research the product or assist in a buying journey? I could personally. I can't imagine any specific industry where customers don't do it at least part of the journey. And the same applies to insurance. And today, everyone, even the customers that you would not think about them, that they are pursuing that kind of approach, they research, they educate and research before purchasing the product. And I've been for a very long time an advocate of the future of the distribution, the physical distribution, the role of the agent. And for me, the future agent has three roles. One is to be the influencer. Second role is to be actually a holistic financial advisor, advice on the products, on the well-being, financial well-being of the customer. And the last one is to become an affiliate, to monetize the audience that he or she creates by educating the customer. And that's the new opus operandi for the future agents and future advisors in the industry. In this sense, the role of the physical distribution is changing. Customer, it's driven by the demand of the customer, how they consume information, how they engage, how they want to interact. The product still on the product side, as the products are complex, because it is about tackling complex aspects sometimes, and the topic of risk profile or customer risk exposure is extremely complicated, and even the insurance professionals are able to address, because the individual risk is dynamic. You can say that it's changing from one day to another. That's why you need advice and guidance from the person. So the journeys are definitely, customer journeys are moving from the research assisted more to the physical journeys, where even the transaction interaction are happening with the advisors, but the value delivered by the human providing the insight, it is I think it's going to stay with us for a long time. And even with the transition to the metaverse, and we can discuss about later, there will be some additional opportunities to simplify the journey, but still, I think that the element of advice and knowledge and insight will be required, because there's just gap.
It's triggering my imagination a little bit, thinking about how the insurance will kind of operate within the metaverse environment. Definitely one talking point that we should jump back into later. Thanks for that, Tomasz. Also for painting a picture of the evolution of what the insurance agencies will look like in the future. Moving on to Samir. Samir, do you see a future where digital channels will overtake physical channels? And I guess the follow-up question is also, like Tomasz was saying, right? The complex products require human advice, human interactions. So from your work with your clients, do you think that there are better ways that insurers can actually simplify these complex products on their digital channels to kind of improve the conversion rate, so to say? What do you think about that, Samir?
That's a good question. I think one thing that and this is not just the insurance industry problem. This is a problem for all sellers going to consumers today. If you look, there was a survey from McKinsey which came up, which was talking about 60+% of the people do want to buy from a human digital kind of a combination in a way. And so, as a seller, we're a software tech company. We have multiple channels. We're engaging people from social media. Everything's there. There's digital, normal channels that we go through with a high touch. But I think what's changing is the mindset of not having these compartmentalized views of X product or X simple use cases go digital, everything else is high touches in person. What's changing today is what we believe is the combination of, look at us. We are here in this AV environment, doing screen sharing and all of these. Technology today has taken such a big leap. And with availability of mobile devices that people can use to kind of get this high level of bandwidth, we are seeing this digitally enabled human touch being infused in every interaction. So it's not really compartmentalizing which channel can do what, but when there is friction in buying a product, you want to introduce and infuse the human touch in it to kind of mediate the conversation and take it forward. If you can't really close a transaction in one sitting, then you have a different problem. It's not just about whether the core product was complex. You probably lost the customer in the journey much earlier. And trying to get them through that process and by infusing the right amount of human touch is really what's critical. And I think this, you'll see this being, embedded in a lot of the, kind of retail distribution arms of being how they're servicing customers. And I think, it's not too far. What we're talking about is in the near and short term that you should see people embedding these kind of technologies.
Very cool. Thanks for shedding light on that, Samir. Now let's move on to Sean. Sean, same question to you. Do you see digital overtaking physical, and how do you think insurers can be more effective in selling complex insurance products on their digital channels? You have the floor, Sean.
Thanks. I as I shared earlier, I think one shift is really a more blended approach towards an omni-channel approach to the market that insurers can adopt, right? And I see that happening, right? I think embedded insurance or digital insurance products by nature of its is a bit more simple, right? So it functions more as potentially a lead generation tool, I think, where Tomasz first suggested, right? The new agent will have different roles to play, right? From all the way from influencing, understanding the customer needs a bit better, up leveling their skill sets when it comes to pitching solutions as well, would all be critical in terms of making a more robust experience that is first created by digital insurance. And I think that complex products would still require some form of human intervention to close the sale, to really guide the customers into a more continuous engagement model rather than a traditional model where I sell you a product and until you make a claim or you need to change your address, I leave you hanging, right? So it's a more continuous engagement model that digital tools can also accord to the customer experience to make it a bit more engaging in throughout the life stages of the customer. And I will also say that digital will never overtake the physical agent, just because not within our time, right? And I dare say that it will perpetually be a blended approach that we need to take to make sure that the customers are better served, right? What it does is, what these digital channels do offer is a stronger customer experience that it forces insurers to start adapting, and getting the right tools would be and really being able to capitalize on these new opportunities is going to be very critical in terms of the future model of insurance.
Thanks for that, Sean. And Melissa, of course, you've touched a little bit on this topic earlier. Would you like to chime in at any other views before we move on to the next talking point?
Yeah, really sort of pulling together everyone's thoughts. I make one more comment that I think it's really important for us to realize that when we talk about one channel versus another channel, we're not talking about sort of taking each other's lunch, right? We're talking actually about increasing the pie. If you just look at Asia, so we are present in Southeast Asia, and Southeast Asia insurance penetration is still less than 3%. So when you think about what you're missing out on, if, you know, it's not really a discussion about channel. It's like we use any channel we can get to really, one, make customers aware about the importance of insurance, and two, educate, and three, then you know, be able to facilitate that sale, and then to your point, Sean, the end-to-end customer kind of engagement and lifetime value. So that's the first point. And then I think the second, really to sort of pick up on your point, Tomasz, about the idea around it's not online versus offline for embedded. I completely agree. So, you know, we're thinking now about where is it that we can meet customers where they are. You know, in a customer's day-to-day life and their journeys, you know, they don't sort of think, hey, I should buy insurance for that. But it's about, you know, how we can sort of take a step back and say, you know, insurance is probably a product or a service that customers do need in certain circumstances, but we should be actually offering it to them in a more contextual way, in a way that is practical, is simple, and that could be offline, that could be online. And we do see that in bolttech, where, you know, the flexibility of the technology that we do offer allows us to go into retail, embed you know, at the point of sale, all the way through to, say, telcos, and then into more traditional insurance distribution as well, where people are used to selling insurance and you know, actually advising as well on the complexity of some of the products.
And I think you brought up a good point over there, right? It's not about taking whose lunch or whatnot. There is still a massive protection gap in Southeast Asia. And I guess that kind of leads me nicely into my next question, right? And I kind of want to take a step back and look at, you know, what your views are on some of the biggest gaps that you see in the insurance market and how digitization is addressing this. So maybe you could also touch on the underinsured side of things, or other big gaps that you see digitization is solving. Since you're already on stage, Melissa, maybe you can start with sharing your views.
Yeah, sure. Look, I know I brought up the insurance gap, but I will talk about a different sort of gap. So, look, I won't pretend that I've been in the insurance industry a long time. You know, my background is in banking. Moved into insurance about 3 years ago with my role in bolttech. But what I realized is that the industry is still highly inefficient. Right? Why is it inefficient? We've all been in the situation where we've tried to look for insurance. We've actually been seeking it, and we've been rejected. Why have we been rejected? Because an insurance company may not want to undertake your risk, right? Whether it's because your house is made of a certain material, your car is a certain model, you're of a certain age. We have all been kind of told that you know, we'll be rejected. Now we see that through our technology and the, you know, the number of what I would say quotations and the flow of data coming through our technology, we see that people are being dropped all the time, and it's not in any one region. Actually, this is a common thread across Asia, Europe, and the US, and really, to me, that's the biggest gap. That there are people seeking and demanding for this service, and we can't, as an industry, actually meet it. And how has digital really helped that? I you know, if you sort of imagine the kind of concept of, you know, demand supply, like you know, Uber, right? The Uberization or the sharing economy. It's a very similar idea and concept, where if we are able to leverage and see what people need more effectively, we are able to match, you know, to the consumer need. And that really, I would say, helps insurance companies and more traditional players in the market, where they're spending an enormous amount acquiring a customer through offline or online, but actually not being able to keep that customer sticky. And we've seen through this type of technology of matching demand and supply, being able to really increase customer lifetime value by sort of over 20%, as well as, funnily enough, this concept of co-opetition, right? If you can offer, say, for example, a competitor product, because you can't offer it yourself, you at least keep that customer together with you as your customer, but you can get a clip of the ticket. And not only that, actually, funnily enough, the data has shown us that 1.6 times people will buy more of your product, because you're actually fulfilling their need and you're being holistic about it. But that requires us to sort of open our minds to co-opetition and really becoming part of an ecosystem to just do better by our customers.
That's some interesting views you brought up. You're really giving me a lot to think about. Thanks for that, Melissa. Let's move on to Tomasz. Tomasz, what are some of the big gaps you see, and how are you seeing digitization addressing these issues?
So I think right now, if you look at the industry, and I would put three gaps just to maybe to follow up on what Melissa was saying. One is definitely the fact of the customer retention. It's a big issue because if you ask typical insurer, around 90% of the time and effort and resources are spent on acquiring customers, and only 10% on retaining customers, which is very, very surprising and strange in a way, because if you look at the profit generation pools, the relationships is inverse. Most of the money are coming from the existing portfolio, not from the new customers, unless the company is selling products that are not necessarily tailored to the customer. I would say, let me put it like this. The second gap is still the problem of the data quality, and especially whenever there is a physical distribution, there's a legacy of culture, legacy of incentive, as well as the big problem of the change management that impacts the data quality of the customer, because this is something that has a domino effect on how well you are able to engage, communicate, retain the customer, but as well as build the strong foundation of understanding. And later on, with the better understanding of the customer, you can roll out different products, underwrite the risk, cover for the new type of the risk that you are not covering, and so on. So it starts at the beginning. The third one is there's a clearly, after spending more than 10 years in the industry, I see two speeds. One speed is definitely on the carrier side, on the underwriter side. And the second one is something that I think is calcifying in a lot of aspects, and what Melissa said, that often insurer will reject the risk. Often it is because of reinsurance treaties, or how the market on the back end is organized, that the insurer is ceding risk or is able to accept only specific categories of the risk because of the reinsurance agreements. And we are not talking too much about this, because reinsurance is a fascinating part of the industry and so on, and there's a lot of interesting things happening, but there's a movement on one hand, on the front end, I would say, of carrier, of underwriter, but often it is restricted by the existing structures, very complex reinsurance structures that do not allow the insurer sometimes to accept the risk or underwrite specific type of the risk. So I see those three areas.
Very interesting points brought up, especially the first one. I think it's interesting in a sense that it seems almost counterintuitive in terms of the focus. Thanks again for painting that very comprehensive picture for us, Tomasz. Let's move on to Samir. Samir, do you have anything to add to this particular conversation?
I mean, I agree with what Melissa and Tomasz have said. Just one example I would like to share with one of our customers here in North America. Traditional reinsurance company, then they launched a digital-only brand, and what they were able to do is digital actually gives the promise of almost unconstrained distribution in a way, right? You can be in underserved markets, undercovered markets, everything you don't need to scale it up in the traditional model that you would scale a distribution force from a offline model. So I think that's one, and I call it the promise because you've yet got to see the real proof in the pudding to kind of make people believe that it's going to happen, but it is unconstrained. And then the other piece I see is on the servicing side is being able to allow for better cost optimization to kind of handle this with the low touch, high velocity type of model. And so, servicing is obviously a big part, and Tomasz was talking about this, that, it's very little focus on it. But I think digital does allow you to kind of do that. And doing that, as that journey gets mapped, you also are collecting a lot of data points on that customer journey to be able to be monetized and better map on your ideal customer profile and be able to kind of hone in on your go-to-market in a better way. So I think some unique perspectives are coming out from this model for sure.
I think data is a big talking point as well, right? And it's enabled a lot of kind of new business models. It's enabled insurers to better underwrite different products. I would kind of like to dive into that a little bit more later as well. Thanks for sharing your views, Samir. Let's move on to Sean. Sean, what are your views on this in terms
I
of
think that
some of the biggest gaps? Yeah, go ahead.
So I think everyone covered well the protection gap and really the overall opportunity. But I would say that, and I completely agree with Samir, right? I think until it's proven, it remains to be seen the effectiveness of the digital outreach. Naturally, digital channels have grown the pie, especially in markets, emerging markets, right, where the protection gap stands to be still quite, like what Melissa said, 3% penetration. There's a lot more that we can do actually about this space, right? But I would say that the other part of it is really the mindset gap, right? Mindset gap in the sense that, insurers, this applies to insurers, this applies also to the regulators, right? That, how do we push this agenda a bit more, right? I think it's still very rigid how reinsurers, like what Tomasz said, are looking at this opportunity pool, right? Conventionally, the industry has always been taking a one product fit all type of approach, right? So how can this evolve, right? How would regulators approve or start programs to really allow for innovation in this very stone age type of industry, right? So I think that is one of the biggest gap or blockers that exist today in terms of helping the industry advance along properly.
Thanks for that, Sean. Let's switch gears and move back to Tomasz. Tomasz, earlier you brought up about the metaverse, right? So I'm just trying to imagine, how do you envision, insurers fitting into this whole world of the metaverse? What are you seeing?
So that's a very interesting topic by itself, because we are really taking the crystal ball and trying to reimagine the world economy and world's completely new set of worlds. But I think we, over the past 20 years, if you think, I'm not sure if anyone is familiar with Second Life
Yes.
as a platform. It has more than 20 years by itself. You think it's actually super mind-boggling, actually, because it's for 20 years already. We had a petri dish or something that we could look at, and still it's quite active economically, but as well as coming back to the insurance aspect. I think metaverse creates one very interesting opportunity for the future of the agents and risk and covering the protection gap. Because if you ask yourself today why there is a protection gap, there are multiple reasons, but typically it's the lack of awareness, the fact that we don't have a full picture of the customer activity, and the biggest gap to have the full picture of customer activity is bridging the gap between real life behavior and actions and translating this into the data. So if you fast forward X years, let's say 2030, where apparently the metaverse economy should be around $6 to $12 trillion, and let's say 30 or 40% of activity of a person will be happening in metaverse, we overcome the immediate blocking point, which is getting the access to the information about the profile, behavior, and actions of the customer into the data. It will be much easier to try to calculate the risk profile, but as well protection gap. And you can imagine in this scenario where we have a personalized risk advisor robots, sort of version 2.0 of the robo advisors or robo investors that's advising you based on your activity and automating your risk protection. Basically, on a daily basis, based on what you do, they will adjust your protection across different segments of the risk. And where you need to speak to someone, you'll be able to engage with with your advisor in the metaverse, because this will bring today, in a sense, it's already happening, but it's in a 2D version in many markets that started actually during the COVID, where advisors are able to conduct their business, advise, and interact with the customer via the Zoom or any other virtual tools. But it's very easy if the risk information is available in the metaverse, advisor is in the metaverse, but as well as I think there's a potential how the metaverse can help industry to educate the customer about the risk. Because today, when you do risk analysis and profiling, it's all graphs. Okay, if you do this, you'll be here. This is the gap. It's not very conducive and not convincing for people. It's just not a great medium to convey the message and convince people to change behavior or adjust. But if you move it to the metaverse, where you have a much more way to express, simulate things, and show the customer the impact, how it's going to look like, it's something that's you can start thinking that actually has a potential to influence and change the customer's behavior and help them actually with the prevention, because they will understand in much better way how their actions or protection will help them to prepare for the future.
It's a lot of interesting thought experiments, right? And certainly insurers could also look at offering protection for digital assets as well, which I believe Sean's parent company has done also. And I don't know if I necessarily want to be talking to advisors on the metaverse, but I'm sure there are some people who might like that. So it's an interesting peer into the future. Thanks for that, Tomasz. Anyone else want to chime in into this topic of the metaverse and how do you foresee insurers fit into this new world? It's open to any of the panelists. Once you unmute, I'll bring you on stage. Otherwise, we will move on to the next topic. Okay, moving along. So, I guess my next question is about digital-only insurers, right? And of course, Hong Kong already has it. I understand that there are some discussions in Singapore. In Malaysia, there's already a draft framework for digital-only insurers. So I just wonder what the panelists think is the impact of this kind of digital-only insurers on incumbent insurers. Maybe we can start with Sean. Sean, what are your views on this?
So I think digital, of course, right? I think as we mentioned multiple times in this entire chat, it's really it offers a much wider outreach, right? And I think because of the lack of a human element, right? The whole premise has to center around providing a stronger customer experience, right? And in doing so, I think also without doing away with the physical agent, right? Expenses from an operating point of view tend to be a bit lower. Of course, straight up, there's a greater outlay on making sure that the entire infrastructure is ready for this particular type of distribution. But I would say that it is that future-proof model is probably a one-time upfront investment before you can amortize it over the years of business ahead, right? The interesting part about this entire digital-only insurer is really it also forces incumbents to adapt. Suddenly, they are forced to go and explore a space that they conventionally have not been reliant on or even privy to. And I think they would then have to start adding such new channels to make sure that, hey, how do I continue staying relevant? If a smaller company has it, how can I have it as well? So I think it forces the industry to move forward. It forces regulators to also start opening their minds that, hey, product don't have to necessarily do a huge amount of fact finding or KYC that the industry has been conventionally used to, but there will be different approaches that or ways of enrollment that can be considered. There's different ways that customers can engage with the insurer that is not something that they are conventionally familiar with. So I see it as a huge new opportunity pool, reaching out to a very different set of customers. And to my earlier points around, this could also function as a lead generation tool for co-opetition, like what Mel said just earlier.
Thanks for that, Sean. Now, before we move on to the next topic, I wanted to jump back into the topic that Samir has brought up about data and new business models, right? But before we do that, is there anyone else from the panel who would like to chime in on their views on how this digital-only insurers will impact incumbents and the insurance market? Yes, Samir, go ahead.
Yeah, I mean, just one thing to add besides
Sure.
what's already been covered. I think any digital-only models are only going to accelerate adoption across the industry, even with regulators. I mean, if you see, Amazon started with a digital-only delivery model, and nowadays you see there's a pickup center. If you want to return, you can go to Amazon Center. I mean, they never were a brick and mortar, but you're going to get this human-enabled digital kind of models which are going to come out. And so similar to, I think what Sean was saying, KYC, when we're looking at intake of and what's happening in in-person KYC and how that ties into digital wallet, digital IDs, ID schemes that governments bring in, all of this is going to kind of come together. There's a huge convergence which is going to come together to kind of deliver an experience which is going to be really taking people to the next level. So I think it's going to up the game for everyone, not just for the digital-only businesses there.
Thanks for that, Samir. Melissa, you seem to have unmuted your mic. Would you like to add to this as well?
Yeah, I would. I
Sure,
mean,
go ahead.
I think this particular topic can draw parallels to the banking industry, right? I think that it's been
Certainly.
maybe about 5-10 years ahead across different markets. Coming from the banking industry, coming from digital banking, when I think about what the guys have said, I think I want to draw on what Sean mentioned earlier around mindset. I feel that it's these sorts of models that will force incumbents and traditional players to think about how to do this, but to almost what we used to say, blow up the bank, right? How do you blow up insurance model and really start to unpick it 0 to 1? And each component of what is insurance on the insurance value chain just gets absolutely challenged and questioned in a different way. And I think that is the key to this. And that is actually going to be quite interesting. And we'll have the same sort of dilemmas as we've seen in banking, where do you build it side by side to, an existing traditional model? Will it converge in the future? Will they cannibalize on each other? All the same, I think, challenges will come up in incumbents. Thus, hopefully we've learned from banking, and hopefully the traditional industries will actually just sort of leapfrog that and actually just dive in, right? And then the challenging aspect of this will be the invitation to all of those massive distribution channels that are already playing in insurance with different business models and have already seen the value of embedding insurance. And, back to the whole point about data, and having a lot more contextual understanding and knowledge of customers' lifestyle on risk, on being able to use that data to not just identify risk, but also cover risk in a more interesting way. All of that is going to be at play. And up for grabs. So, I'm really sort of putting the challenge out there to traditional players to not get stuck and challenge, in the same way that the banking industry is still being having the same sort of dilemmas, and hopefully just like learn and leapfrog that whole process.
Yeah, certainly it'll be interesting to observe how much of the same cycle that insurance might replicate. Thanks for bringing that up, Melissa. Before we move on to the next topic, anyone else want to add on to this? Or
Yeah, I just would like
yeah,
to.
Tomasz?
I think that's definitely we can compare it with the banking, but insurance is ahead in a sense because if you think about digital model, it's a direct model. The direct model has been present since 90s in Europe in the markets, especially and we've seen how it works in a sense. The experimentation, the digital versus traditional insurance, and but it has one very important aspect: the introduction, and I think it's a positive aspect. Introduction of the digital insurance license. It's because it's reducing the capital requirements, so it's easier to establish, enter the market. Because typically that was the barrier. And this is allowing insurtech companies to move to the hybrid or full stack models. It's one very important dynamic. And the second is we have to remember that insurance is a volume business. You need to have critical mass to make money, because otherwise the only people that make money in the value chain are people that sell, distribute the insurance, and in case of digital insurers, those are your customer acquisition channels. And right now, I think in all of the market that I have seen, acquiring a customer online is more expensive than acquiring customer offline. And so that's not necessarily the right way, because the profitability in the end, the laws of economics are like laws of gravity. Instead of energy, you need to spend a lot of money to overcome them. And in this case is to make the business profitable. But I think introduction of the digital insurance, what is forcing, not necessarily competing for established pools of risk, and competing only on the price, but try to do the product experimentation, because that's the winning strategy. And this is something that is in every market where the digital insurance license have been introduced. This is what was happening, and I think it's very positive that real product, end-to-end product innovation impact.
I wish we had more time. There's so much to unpack with what you said over there, but I guess we don't really have time to dive into each and every team. Let's maybe move back to Samir to talk about the explosion of data and how that's shaping business models and the insurance industry. Samir, any views on that in terms of how data is shaping insurance? Your mic is muted, by the way.
Yeah, I mean,
There we go.
today, if you look at the amount of data that digital channels can collect today, and even collected and being able to allow to be used based on GDPR or other regulations, even with that, it gives you a lot of better insights in terms of the customer journey. You feel that with AI models, you can do better risk modeling, you can do better propensity modeling around this to kind of come up with something which is much more accurate in terms of a product, in terms of price, and being able to be more competitive around there. In all of this is also, if you look at it even from a risk perspective, you've got, we talk about contextual data, but contextual data is always happening. You've got a device and you're working on the device, and there are multiple contextual data points you can collect from the device that you're operating on. And if you feed that in with continuous risk-based authentication, you can actually do a much better job in terms of being able to kind of stay in good books with your regulators around, especially around issues with money laundering problems or terrorism financing. Any of these kind of constraints that regulators put on you, you're in actually a much better position to handle those with a digital only channel than going with the traditional route, because being able to kind of get that data and being able to scale it at real time is very difficult in the traditional models today.
Thank you for that, Samir. Melissa, Sean, Thomas, anything to add to the conversation about data?
maybe if I just add, I mean, our company bolttech has been really looking at different types of collection of data. So in the areas of, say, for example, computer vision, if you sort of think through how data can be collected, but also used. I mean, we are at one of our hero products is actually the device protection, right? And if you think about that and the digital models for that, you actually need to be able to imagine a world where you can see that device and really understand the condition of that device remotely. Otherwise, and do that in a low-cost way, right? So, yeah, we've got a couple of products that we've been not just experimenting but commercializing that actually looks at computer vision, looks at how we can understand the condition of a device, and with algorithms, continuous learning, try to understand that. Then what kind of risk we'd like to take to actually protecting devices. But if you extend that thought process to other areas, auto, anywhere where you've got the physical condition, say, for example, property, there's just so much that one can do. So, apart from, Samir, what we're talking about on the distribution side, I think the product itself, and then, what you can actually do to change the sort of underwriting models is fascinating, and an area that we will continue to explore.
It's interesting, right? We are seeing a lot of insurers also using computer vision for claims related to auto, and there's just so much exciting things that's happening in this space. Before we move on, Tomasz, Sean, would you like to add anything? Tomasz, yes, go ahead.
Yeah, just I think the biggest change for the industry, and that's allowed the industry to move leap a few steps, is the initiatives pushed by the governments to establish open API and data standardization, which opens a completely different playbook for players and ability to innovate around product distribution and coming back as well to the protection gap. And this is something that happened in Australia. It's happening as we speak with initiatives like Findex in Singapore. Hong Kong is doing exactly the same. So many markets in the region, but as well globally, are pursuing this, and I think that's a big step forward.
Thanks for that, Tomasz. And while I still have you on stage, I guess another important question that we do need to talk about is that with all this digitalization, of course, there are certain cyber risks that comes with it, right? And how are you seeing insurers protecting their users and their customers from cyber risks and bad actors?
I think that insurers are doing a relatively good job. When it comes to the cyber risk, it's difficult to say that anyone is doing a good job, but relatively good. And mostly it's thanks to the regulators, progressive regulators like in Singapore and MAS, putting the right frameworks, right standards, and challenging the industry. Naturally, insurance is attractive target for criminals, not as attractive as banks because we don't have money itself, so you cannot steal actually the assets itself. But still, there's a lot of information, sensitive information, so insurance need to play the risk, and it goes hand in hand with the initiatives of migration to cloud, adoption of a lot of advanced tools, and application of AI in solutions like endpoint protection. And this is, I think, it's a quite good collaboration with the industry bodies, but as well as regulators, pushing the envelope and protecting, because insurance is about risk. It's about trust, and we need to first assure that we can protect customer information. That's the first. That it is a table stakes. If you cannot protect the customer information, it's difficult to promise customer in the 30 years when something happens, we'll be there to pay, help you go through the mishap or some challenges moment in life. So that's why it's as well. It's very high on the agenda of every single insurer, and it's improving despite having a lot of legacy. I think the situation is moving in the right direction.
And that's an important point as well, right? Insurance is essentially a trust business, so it's important to ensure that you can protect your consumers' information and whatnot. Samir, since this is up your alley, what are your views in terms of whether insurers are doing sufficient, and what else can insurers do to protect their users from bad actors?
I mean, it is great question here, but it's very nascent. I think it's happening as regulations are getting formed and people are realizing what needs to happen. Protecting and locking down your environment is, everyone's been doing that for a while, but I think it's a little more than that. One is, I see it as twofold. One is having strong KYC, where you're using the right level of identity verification to kind of onboard people in, and then some combination of, as Thomas was saying, endpoint protection with some kind of continuous risk-based authentication through the journey to make sure that you are eliminating all angles of fraud when it happens. You're not really looking at data in posterity to say, did fraud happen? I'm trying to stop fraud from happening. So I think a lot of technologies available. We have some great products on that as well, trying to solve the same problem for our customers here.
Thanks for that, Samir. And Sean, you unmuted your mic, so I'm guessing you wanted to add into this as well. What are your thoughts on this, Sean?
I think naturally insurance is it represents a more risk-averse sector that, before they launch digital insurance, a lot more considerations do happen before launching. So with the cyber risk, right, actually one of our sister company, Cymetrics, right, they are seeing a lot of uptake in terms of cyber assessment and cyber security provisions. And I think one thing that helps, right, is really because in recent times, right, you see a spike in terms of a lot of cyber attacks, right? So especially on the bank side. So I think with insurance companies launching new digital offerings, right, they can simply just emulate and take the learnings from these setups and apply it to the business. So yeah, I think it's a huge part of the business moving forward, looking around us and seeing what are the different cyber threats. But yeah, it's definitely a cause for concern that comes with digitalization.
And definitely, insurers do have a treasure trove of data that a lot of these bad actors are just eyeing on, right? So it's certainly an area to pay strong attention to. So we are almost out of time. Maybe we can move on to closing thoughts. But before we do that, Melissa, anything else to add to the topic of cyber risk?
Yeah, maybe just to take it from a slightly different angle. We've been doing a lot of work in the consumer sort of angle and to understand, where people are at in terms of their digital lifestyles. And really, one of the biggest trends that we see through the studies that we've done is very much about the fact that this is a worry for everyone from Malaysia through to Indonesia through to Italy, wherever we are. But the biggest thing is that they don't know how to protect themselves. And being insurance or in the insurance industry, people say, well, just buy insurance, cyber insurance. But the funny thing is that when you actually dig deeper, it's actually the worry people have is when we do come under attack, it's not your typical sort of reimbursement models. They don't want to be compensated for this. They want to be able to recover. So, when we go and move into the sort of digital lifestyle, and I won't even say move in, we are in the digital lifestyle. COVID really exacerbated that. Customers are worried about their families, they're worried about their children, and they're trying to figure out how to help themselves. And I think that there's a real role in the protection industry around what it is that we can do to facilitate education, help people, nudge people in the right direction. But then when there is an issue, how do you actually help to remediate? How do you actually help people to recover their lifestyle? Because hey, that digital is surrounding, it's all encompassing, and it's around us, right? So this is the area that we're very interested in.
Those are some important points, right? And sometimes it's not about compensation, it's about recovery, it's about minimizing the damage that's done after the attack as well. Thanks for that, Melissa. Maybe you could also share your closing thoughts with us and maybe some predictions about where you see the industry head.
Yeah, I mean, look, I think very similar to my opening thoughts. I think it's more about how we can cooperate, how ecosystems will come together to do better by customer. There's almost no choice. I think, at this stage. And if I was to sort of predict again, like in the product space is, my area. You closed out, Vincent, I think quite appropriately with cyber. I think this whole area of kind of online security, the worries that people have and the lifestyles that we are living now, this is, I think, the biggest risk that we should all be focused on as an industry.
Thank you for that, Melissa. Moving on to Tomasz. What are some closing thoughts you have to share with our audience?
The industry is very big. There's a lot of opportunity for cooperation and as well as competition, because in the end, it's driven by the customer demand and customer risk that is changing. And I think that the insurance, the pandemic proved how important insurance is, and I think that's we'll see this trend continuing because people have a long memory to the things that impacted them deeply on an emotional level, and the pandemic is something that we'll remember for the next decades, and people will think about the risk that they have in their lives, things that they don't control, that will translate to the growth of the industry. And I think that in the next few years we should see the industry to cross $7 trillion, which is huge by itself if you think about that. So that's why it's a big playground, a lot of space for everyone, and a lot of growth.
Definitely. Yeah, it's an exciting time to be in the industry. Thanks for that, Tomasz. Moving on to Samir, closing thoughts and some predictions that you're seeing in the near to medium term. Yeah, Mike. Yeah, go ahead.
Yeah, sorry. Yeah, I mean, I think this is, for both traditional, insurers as well as digital-only insurers, out there. When you're looking at, kind of, how engaging with customers, look beyond just, traditional silos. I think this is evolving as we converge with a lot of other underlying market trends in terms of what's happening with identity verification, national ID schemes coming together, regulations changing. I mean, I'm very bullish about the digitally enabled human touch. What we have traditionally, had looked at siloed. I think context, using some form of contextual collaboration, being able to infuse that human touch to kind of get people past. I mean, the way I look at this is always you've got to get people past the friction to kind of close on the transaction. End of the day, everyone wants to close a transaction. And doing this in a secure way is what needs to be enabled for your customers. So I think focusing on that is definitely something I would advise people on.
Thank you for that, Samir. And Sean, your closing thoughts for us today.
Yeah, so I agree with thanks to all the speakers as well. I think very strong points raised. The opportunity in the insurance space is definitely huge. I was just reading this article a couple of weeks back, right? And the final thought that I was left with was really, is the insurance industry going to be the only one that doesn't undergo digital transformation? So my hope for it is it doesn't end up as the only one. And I see a lot of opportunities for insurers to grow in this particular space to be a bit more ready, right? I think on a product level, I think insurance will face a lot of new opportunities or product opportunities. It will take a different shape in the sense that, the new digital players will come up with their own form of insurance, right? But maybe terming it as service guarantees so that, you work around regulatory governance, for example, right? So regulators will find it harder to regulate such solutions. Insurers, reinsurers will have to be nimble and innovate to really stay in the mix when it comes to providing such new innovative concepts to the new consumers of tomorrow. So yeah, I think it's a very interesting time to be in the industry, and thanks for having us on this panel.
Certainly. And just to conclude, it is an exciting space with a lot of room for growth, right? As Melissa pointed out earlier, there's only like 3% that's insured. And, from what we've been observing in terms of startups within the financial services space, insurtech is still largely underrepresented compared to other segments like payments and whatnot. So a lot of interesting things to be happening over here. There's definitely a space to keep an eye on. And again, I'd like to thank everyone for tuning in, and also our speakers for sparing the time and dialing in at ungodly hours to share their insights with us. With that, I hope you guys have a great rest of the day. Take care and bye bye now.